Gentlemen, well, gas prices still sky high. According to AAA, the national average is $3.85. That's up 13 cents over the price just 1 month ago, up 36 cents over the price this time last year. Here in Texas, the average price for a gallon of unleaded is now $3.66. That's up 11 cents over the price a month ago, up a quarter over a year ago. To help you find the cheapest gas prices in your area, you can use our exclusive gas tracker map. It's right on our website, myfoxhouston.com, under the traffic tab. And today you can find gas for $3.39 in Sugar Land. You know, gas prices have remained stubbornly high in part due to what is going on with the Federal Reserve. It's just announced another stimulus program pumping $50 billion a month, or about $40 billion, I should say. Misspoke there, a month into the economy. What does that mean for us? Here to help explain the concept and how it affects you and me is financial analyst Lance Roberts with the Street Talk Advisors. Lance, step closer to me. For goodness sakes, we want you in the light. Hanging back there in the shadows. All right, so the Fed has tried this twice before. Right. Once was at the end of the President Bush's last term, about $400 billion, which carried into the Obama administration. The second part of that was an amount that was increased by the Obama administration, about $1.2 trillion. And then the second time around, the Obama administration injected $600 billion. As part of this program, and now we're looking at a third go around. So very confusing for folks. Explain the concept.
Well, what's happening here is that the Federal Reserve believes that by buying bonds out of the market, and this is very specific, a very specific transaction, they're going to the market and they're either buying treasuries or, in this case, mortgage-backed securities out of the market. When they do that, the money is then transferred to the big banks, Bank of America, JP Morgan, Goldman Sachs. They receive that money because they're the ones selling the bonds to the Federal Reserve. So now these banks have a lot of money, and what do they do with it? Do they loan it to you, or do they invest it into the market?
Well, they're not loaning it to us because it's extremely difficult to get a loan these days.
Well, and this is why, you know, you've seen gas prices have the largest spike in the last 5 years in 1 month, in the month of July, is because the markets were front-running expectations that this program was going to happen. When these bond transactions start to occur, it puts a lot of money into the markets. And the banks have a choice. I can either loan you money for 30 years to buy a house at some 2 or 3% interest rate, or I can buy assets in the market, such as stocks or commodities, and make almost a guaranteed return so that they can kind of control the markets. So that's where the money goes. And this is why you don't see the money flowing through the system. You don't see people like you and me and the middle-class American benefiting from these programs. Benefits Wall Street tremendously. They'll make huge profits off of this, but it won't help you.
Yeah, and I guess that's the issue, right? So let's talk about some of the things that impact us. Gas prices. Why? I have a diesel vehicle, and it's still $4 a gallon, and I've been waiting because gas prices have been going, or the gallon of oil, barrel of oil, has been going down. So I'm expecting that to trickle down to the gas pumps. Hasn't happened yet.
And it won't. And the reason is that part of this program is going to drive oil prices higher. It'll drive food prices higher. It'll drive basic commodities all across the board will be higher. And of course, this is going to translate to higher clothing costs for you, higher food prices at the store, because the energy component of transporting those goods and services are going to go up because of this program.
So how is it benefiting our economy then if you and I were not able to buy the basic necessities?
Well, it doesn't benefit the economy. And if you look at the last 3 years that we've been, last 4 years that we've been doing these programs, the economy is still running at basically a very subpar rate of growth.
So why do it, Lance?
Because this is about the banks. If you notice what Ben Bernanke said in the most recent statement, he said the economy is far weaker than we expected. We're doing this to help support the economy, but in reality what they're talking about is supporting the major banks. The weakness is hitting the major banks.
We're nearly out of time, but I have to ask you, President Obama is fighting for a re-election campaign right now, saying that his platform is programs that benefit the middle class. We're a part of that middle class. This isn't benefiting us.
And it won't. And that's the whole point about this. You're not going to see lower interest rates. Interest rates go up during these programs. Food cost and living cost will go up under these programs. We've seen it both other times that we've done this, and there's no reason this time is going to be different. And this time is even bigger than the previous two.
Political move?
I think so.
All right, Lance Roberts, thank you so much. We appreciate your input. He knows far much more about the economy than I can tell you. All right, appreciate you being here.
My pleasure.